Today's video, you're going to learn about 5 steps of revenue recognition, and we are also going to solve a numerical question so that we understand the 5 steps better. Let's get started. Okay, now first step is your identifying your contract. I'm so sorry about this. First step is your identifying your contract. And how will you identify the contract? The contract has to be approved by both all the parties. It has to have commercial substance. What is meant by commercial substance? Commercial substance means the transaction, it has a genuine economic impact on both the parties. It changes their future cash flows, it changes their risks. So that is called as commercial substance. And the collection of the consideration is probable. Your contract is clearly able to define the rights and payment terms. Now your next step is your identifying separate performance obligations. Now separate performance obligations could be either distinct goods or services, or a series of similar services that are bundled together. For example, there's a construction of a building going on, and then the services in this construction are piping, wiring, installation of the equipment, and finishing. They're all codependent on each other. They're not separately identified, so they all form one performance obligation. When you're talking about a software company that enters into a contract to provide license services, updates, technical support, now these are independent of each other. They can be sold independently, separately. That is why there are 3 separate performance obligations here. Now let's take a look at how we determine the transaction price. You're taking into consideration both fixed and variable. You're deducting your discounts or rebates. You're taking fair value of your non-cash considerations, and you're considering time value of money in case the time period is more than 1 year. Correct? Now the fourth step is to allocate your transaction price. You're going to allocate the transaction price based on the stand-alone prices. Okay, now let's say a company is providing all these 3 services at a bundle price of 2,50,000. I have to recognize license revenue, the revenue from updates, and revenue from support services differently. How am I going to allocate that? I am just going to add all of these first. 90, 70 and 50. How much is that? 90, 70 and 50. It is 2,10,000. I am going to take weights of all of these to allocate my bundle price. 90,000 by 2,10,000 into 2,50,000. Again 70,000 by 2,10,000 into 2,50,000. 50,000 by 2,10,000 into 2,50,000. Let me just calculate this for a moment. 1 second. 90 by 2,10,000 into 2,50,000. It should be 107142. 70 by 2,10,000 into 2,50,000. This should be 83,333. And 50 by 2,10,000 into 2,50,000 is equal to 59,524. So this is what I am going to recognize as revenue under license, updates, and support. That is called allocating your transaction price. Now your last step should be to recognize revenue. You're recognizing revenue in 2 ways, either over time or at a point in time. And usually service based revenue is recognized over time, and product based revenues are recognized point in time. So whenever your performance obligation is satisfied, whenever you have provided the service and transfer the product to your customer, you're recognizing the revenue. Let's take a look at this numerical example. Company A sells machine for 90,000 and includes 2-year maintenance service worth 10,000. Contract is identified. Okay. Number one. Number two, identify separate performance obligations. What are my separate performance obligations here? There is a machine and there is a maintenance contract. Okay. My third step is my transaction price. My transaction price is 100K. My fourth step is to allocate transaction price. How am I going to allocate this transaction price? 90,000 of revenue for machine and 10,000 of revenue for the maintenance. This is a 2-year maintenance, remember. So, for example, I am at year 1, so I am going to only recognize for first year. Let's see in the next step when I am recognizing revenue. Machine is supposed to be recognized point in time because I have delivered machine, I have received the money. So cash 1 lakh, correct? 2, sales 90,000, sale of machine, okay? 2, maintenance revenue for 1 year. Now this was for a 2-year period, correct? Now 10,000 is supposed to be recognized equally over 2 years. Now 10 by 2 is 5,000. 5,000 is what I am going to recognize this year, and the rest of the 5,000 is my unearned maintenance revenue. At the end of the next year, I am going to reverse this unearned maintenance revenue entry like this. Unearned maintenance revenue to maintenance revenue. 5,000 and 5,000. Alright, this was your revenue recognition. Thank you for watching the video. Please let me know your feedback in the comments and see you in the next video. Bye.